What is up, YouTube? Welcome back to another video on high altitude investing. In today's video, I'm going to be teaching you guys how to trade trading patterns in bull markets, how to spot them, how to properly trade them. I'm going to be running over my personal favorite patterns, the ones that I see the most inside of cryptocurrency. So it's going to be a really awesome video. You guys are going to want to make sure to stay clear till the very end because there's going to be a lot of awesome content in this one. If you guys are not a subscriber to my channel already, go ahead and hit the subscribe button, as well as sharing these videos with your friends. I really appreciate everybody that does that, as well as everybody that likes up these videos and comments in the comments section below. I really appreciate all of the new subscribers. I am about to hit 37,000, so let's see if we can go ahead and get to 37,000 over the next few days on my channel. Thanks again for tuning in today's video, and without further ado, let's get straight into it. So what is a trading pattern? A lot of people maybe don't even know the absolute basics of what a trading pattern is. Inside of the markets, we look for different patterns and we actually play based on these patterns. So in a bull market, what you're looking for is upside continuation patterns, patterns that would suggest that the market is going to keep going higher and that you can go ahead and buy based on that pattern. In a bear market, you're looking for downside continuation patterns, like we saw this kind of bear market right here. So in the bear market, you're actually looking for patterns that would suggest downside continuation. And when you get a break of that pattern, when you actually get confirmation of the pattern, is when you go ahead and take your positions or sell or short or however you're planning on trading based on that. So a trading pattern is simply a pattern that occurs inside of the market. In bull markets, you're looking for upside continuation. In bear markets, you're looking for downside continuation. So this is the cryptocurrency total market capitalization here. And I'm really not going to use this very much. We're going to go over here and I'm actually going to grab the trend line tool and start drawing examples of bull market trading patterns. So if we just go ahead and take the trend line tool, we can start drawing all sorts of different trading patterns here for you guys. I'm going to go ahead and grab this. We'll switch it to a little bit of a thicker of a pixel here so you guys can see what I'm drawing. Okay, so one of my favorite bull market trading patterns is the triangle pattern. Basically, when you're in an uptrend and you're seeing higher highs and higher lows inside of the market, this is what a bull market looks like. You're looking to find a certain point in the market where it consolidates. Consolidation means it's moving in between a range. You can have all kinds of different types of consolidation. You can have consolidation that moves inside of horizontal ranges, inside of triangle ranges. There's a lot of different types of consolidation patterns. But this one right here is a triangle consolidation pattern. And what you're actually looking to do, since you're in a bull market, you're looking to buy the breakout of the pattern. So this is a downward pointing resistance and an upward pointing support level. So that's why it makes a symmetrical triangle pattern. And once the prices actually break the resistance, that gives you confirmation that we're going to see further upside inside of the market. And the pattern itself actually moves the same height as the pattern. So you measure from the lowest point in the pattern to the highest point in the pattern, and then you can take this level and place it on the point that it breaks out. And that gives you a minimum target. It's a minimum target, you guys, because often the market actually goes ahead and sees continuation past that level. You actually usually break above the minimum target level, but that's a very safe spot to place your sell orders and actually take profits in that area because you know for a fact there's a very high probability of that level being reached. So that's a symmetrical triangle pattern. It occurs in bull markets quite often. It's a very profitable pattern. Let me just go ahead and show you an example of one that we saw recently inside of the cryptocurrency total market cap. If we go into the 2-day candlesticks right here, and then we go ahead and take this tool again, and then we just draw the support and the resistance. You guys can see that we had a symmetrical triangle pattern. We were in a bull market already, making higher highs, higher lows, trending up. And then we met a resistance point, found support, bounced, found support, bounced. Here, let me draw this a little better. Found support, bounced, found support, bounced, found support, and broke up. So this right here was the confirmation point. When it broke above that downtrending resistance line, that red line on top, that was confirmation that we were going to see further upside from that level out. So that pattern went ahead and played out. You guys can see that if we measure from the peak high to the peak low, and then you take this little tool and place it on top, you can see that our minimum target was not only reached, but we actually overshot our minimum target. We almost doubled our minimum target. In fact, we can see if we doubled it. Yeah, we basically exactly doubled our minimum target for that pattern. And when you're in raging bull markets, you guys, like we are with Bitcoin, especially in the big picture with crypto, you guys, these patterns often overshoot your expectations. They often go much, much higher than you actually expect them to. So that's a symmetrical triangle pattern, super, super useful. Now let's talk a little bit about an ascending triangle pattern. So this one has a flat top, and this one has a rising bottom. This is an ascending triangle pattern. Now what happens inside of a bull market is you're trending up, trending up, trending up, trending up, and then you meet a resistance point. Then the market corrects, it finds support, and it starts making higher lows, but it doesn't get higher highs, meaning that this resistance right here is flat. It's not making higher highs. Each time it reaches the same resistance point, it's selling back off. And then once it breaks that level, once it gets above that level that's flat, the flat top, that confirms the ascending triangle pattern. And again, you guys, you get a minimum target of the height of the triangle measured at the point of the breakout. So as you guys can see, we would expect this market to go up to here. This would be our minimum take profit for Bitcoin at that level. Now, obviously, you guys, oftentimes you do get continuation. Like I said, a lot of times you get continuation much higher than your minimum target. But that's a place you could be confident in at least taking some profits off the table and then letting the rest ride inside of the market. So that's the ascending triangle pattern. Again, you guys, you're in a bull market. You have higher lows with flat top. And then at the point of breakout, you measure from the peak high to the peak low of the pattern, and that gives you your minimum target, which would be right here. So let's go ahead and see if Bitcoin has one of these patterns. Inside of this bull market. Yes, we do, you guys. Look at this right here. This right here is the ascending triangle pattern in Bitcoin. As you guys can see, we're in a bull market right here. We come up, we test resistance, we reject resistance, we bounce up to resistance again, we find support, making higher lows, yet we're hitting this flat top level. And then we actually successfully break above that resistance point. So this right here is the confirmation of the trading pattern. We actually came back down and tested the top of it as support. This does happen a lot of times on breakouts. For example, this symmetrical triangle. Oftentimes, it didn't do it this time, but oftentimes it will break out, test the top of the triangle again, and then proceed to hit the target. So don't be scared. And also, it's actually a really good time to enter a lot of times. If you miss the actual breakout point, then you see it coming back down and testing that level as support. It's actually a pretty high probability entry. So this ascending triangle pattern, I'm just going to go ahead and make it a little bit more clear for you guys here. Maybe zoom in even a little bit here for anybody that's watching on maybe smaller screens or mobile. So as you guys can see, this ascending triangle pattern broke out. So if we take from the peak low of the pattern to the peak high of the pattern, we can measure our minimum target. Now, this one obviously saw massive continuation beyond the minimum target. We actually got 1, 2, We almost got 4 times the minimum target before we saw the next trading pattern that we just barely discussed, the symmetrical triangle with the breakout. So that one was very, very, very awesome for anybody that was trading that pattern. You made a lot of money trading that pattern. Very, very successful trading pattern, and one that you guys can look for in the future. It's actually possible. So as you guys know, I've been talking a lot about Bitcoin and the 618. So what we're watching for with this pattern right here inside of the total market cap, algorithm short the 618 level. So as you guys know, I've been talking about a potential C wave here inside of the total market cap, another correction to come test this support level right here before we see upside continuation. But another scenario to watch for is if we don't actually fill these horizontal support levels right here, all of this horizontal support that we've been seeing in Bitcoin and the total market cap and many of the altcoins. If we don't fill that support level, it's actually possible that we start forming an ascending triangle up here too. It's possible that we come test this resistance, come back down, find support, test resistance, and break out, and then see upside continuation. So you just want to be watching for those different potentials. This is why it's not good, especially in bull markets, to get 100% out of the market because you miss a lot of opportunity. And that's why during this area right here, we are reducing risk into USDT. So basically, if it drops lower, we make even more money buying even cheaper entries. If it starts consolidating on support, making some type of continuation pattern, then we just accumulate all through this range, noticing that it's not making it's not showing conviction for a C wave, and we go ahead and make money on this entire continuation pattern inside of Bitcoin and cryptocurrency. So when you reduce risk in times of FOMO, you're in a very, very good position to profit pretty much no matter what the market does. And if it goes lower, you're in a very, very, very good position to profit because you've just bought way cheaper than everybody else in the entire market, and everybody would be panic selling. So let's talk about some more continuation patterns. So the other continuation pattern that I see in bull markets is the horizontal consolidation range. I'm not sure if I see any good examples of it right here on this chart exactly, but I know there's altcoins and previous examples in the history of Bitcoin that it did this. But this is a horizontal consolidation continuation pattern. Basically, we have flat top, flat support, and then of course at the point of breakout, that confirms the pattern. And again, you guys, it moves the same height as the pattern itself as a minimum target. You can expect that. So that's horizontal consolidation. I think probably the best example of this in this chart, and it's not really the best example, you guys, because I think in Bitcoin it looks a little better. This is the total market cap. In Bitcoin, this looks a lot more like a horizontal consolidation. You guys can actually see, if you go look at the Bitcoin chart, how this level pretty much hit this top, and then it basically came all the way back down to here and then saw continuation. But inside of the total market cap, there's enough other coins that were rising that in that period of time that it looks a little bit more like an ascending triangle pattern. This pattern right here is definitely more of a symmetrical triangle. This one was an interesting one because we actually were in a bull market and then we saw correction and then it started forming the triangle. But that's, that can happen too. So just be aware of the different kind of versions of that pattern. In the bear market, we saw this is pretty much a horizontal consolidation range. I think if you look at the Bitcoin chart, it's even a little bit better on that one too because it comes up and tests that level. But, you get the breakdown right here. This is a bear market horizontal continuation. So that's definitely an interesting pattern to keep an eye on, you guys. Definitely one that you guys can make a lot of money trading throughout the bull market. All right, so another very, very useful pattern is the falling wedge pattern. And I do see coins doing this one right now. So it'll be interesting to see if they do successful breakouts of this pattern. In a bull market, oftentimes you have kind of this rising price and then it starts to fall. Now you have falling downward angled resistance as well as downward angled support. Basically what this means is sellers are buying, accumulating, while buyers are getting squeezed into a tighter range. And then again, once it breaks out of the resistance point, You see upside continuation. The upside continuation has a minimum target of the size of the triangle. So you can take that at the point of breakout and use that as your minimum target. Again, you guys, that's a falling wedge continuation pattern. Another continuation pattern is a bullish flag pattern. This one is downward pointing support, downward pointing resistance, only they're not squeezing into a tighter, more triangle range, but rather it's horizontal in nature. It's just angled horizontally. It's horizontal diagonal. And then once you get the point of breakout, this pattern actually moves bigger than the size of the consolidation range. This pattern moves the same size as the flag pole. So however big the leg up right here was, is how big the continuation, the confirmed continuation target will be upon the point of breakout. So this one, produces very, very large moves on the upside. So it's a very profitable pattern to play. Again, you guys, this is a bullish flag pattern. This is very, very common in cryptocurrency and Forex and stocks. I love this pattern. Very profitable to play this pattern. But again, you guys, you want to wait for the breakouts of these patterns because you can't have support failures, and then the pattern can invalidate itself and then you don't get the upside continuation. And there is the rare case. This is why when you're trading these patterns, it's smart to have risk management in place, stop losses, things like that. There is the rare case where you actually get a confirmed breakout of the pattern. And then instead of the market seeing upside continuation, what you actually see is something more like this. We see upside, we see this consolidation, we get a confirmed breakout, and then it just trolls everybody and comes back down. So you do have some false patterns. You can have a false pattern, but most of these patterns have pretty high probability. But to protect yourself, use your stop losses, use your risk management, and be aware of that potential. So those are a few of the main trading patterns that I personally use inside of bull markets. Again, you guys, you have symmetrical triangles, you have falling wedge patterns, you have ascending triangles of flat top, rising bottoms, you have bullish flag patterns, you have horizontal continuation patterns, and those are really the main kind of more triangle-like patterns or the more flagpole type patterns that I trade in bull markets. Obviously, there's more than that. You have stuff like the inverse head and shoulders pattern right here. This is an inverse head and shoulders. When you get a break of this level, you see continuation, the size of from the head to the neckline of the pattern. So there's more patterns, and if you guys are interested in learning more about the details of these patterns, I have a course, the Elliott Wave Power Series. It's definitely directed to people that have larger portfolios that are looking to take their trading to the next level, that are looking to transform their lives, transform their trading. I go all into depth about Elliott Wave theory, all into depth about trading patterns, all into depth about market cycles, all into depth about risk management. All of that stuff is inside of the Elliott Wave Power Series. It's definitely directed to people that have larger portfolios because you guys can really take the information in there and expand what you're doing and grow your portfolios very, very quickly. So if you guys are interested in that, go ahead and send me a Gmail email or a Discord message, and I can get you guys set up with a discount on the Elliott Wave Power Series. Thank you guys so much for tuning in today's video. If you enjoyed it, go ahead and hit the like button. Share this video with your friends. Again, hit the subscribe button so we can hit that 37,000 mark. I love and appreciate every single one of you guys. Happy weekend, everybody. I know it's a Saturday. I normally don't upload, but hey, figured you guys could learn a little something about trading patterns. So thanks for tuning in, and as always, stay profitable out there.